It's Monday, the 12th of February, 2024. Welcome to the 26th edition of the Entrepreneur Series. In this series, we will be taking a look gauging the success of African entrepreneurs in a scientific and objective fashion. Introduction. In today's fast-paced business environment, it is crucial for African entrepreneurs to be able to accurately gauge the success of their entrepreneurial efforts. This not only involves assessing financial metrics such as profitability, economic sustainability, and positive cash flow, but also evaluating the impact their products and services have on customers and ensuring that they are compliant with applicable laws and regulations. Profitability. Profitability is one of the key factors in determining the success and growth of a business. It refers to the ability to generate income that exceeds expenses and generate profits over a period of time. To assess the profitability of an African entrepreneur's startup or mature SME, several financial metrics should be taken into account. One common way to measure profitability is to calculate gross profit margin. This metric measures the percentage of revenue remaining after deducting the cost of goods sold, COGS. It is calculated by dividing total revenue by the cost of goods sold and expressing it as a percentage. For example, if a company earns $100,000 in sales and has total expenses of $50,000, its gross profit margin is 50%. In addition to gross profit margin, understanding the net profit margin is crucial. This metric measures the percentage of revenue that remains after deducting all expenses, including the cost of goods sold, operating expenses, and interest. It is calculated by dividing net income by total revenue and expressing it as a percentage. For example, if a company earns $100,000 in sales and has total expenses of $50,000 and interest payment of $20,000, its net profit margin is 20%.
Economic sustainability. Economic sustainability refers to the ability of a business to continue its operations profitably over the long term. It is important for African entrepreneurs to evaluate the sustainability of their businesses to ensure their long-term viability. To measure economic sustainability, several key financial indicators should be assessed. One such indicator is return on investment, ROI. ROI measures the return on capital invested by a business. It is calculated by dividing net profit by capital invested and expressing it as a percentage. For example, if a company earns $100,000 in net profit and has invested $1 million in capital, its ROI is 10%. Another indicator of economic sustainability is retained earnings. Retained earnings are the portion of profits that are retained by the business and used for reinvestment or dividend payouts to shareholders. It is calculated as the difference between net income and dividends paid out to shareholders. For example, if a company earns $100,000 in net income and pays out $50,000 in dividends, its retained earnings are $50,000. Positive cash flow. Positive cash flow is a crucial aspect of any business, as it represents the inflow and outflow of cash in the business. It is important for African entrepreneurs to monitor their cash flow to ensure adequate liquidity and financial stability. To measure the cash flow of a startup or mature SME, several financial metrics should be evaluated. One common way to measure cash flow is through the cash flow statement. This statement provides a comprehensive overview of the inflow and outflow of cash in the business over a specific period of time. It breaks it down into operating activities, investing activities, and financing activities. By analyzing the cash flow statement, entrepreneurs can gauge the availability of cash for reinvestment in the business, payment of operating expenses, and debt repayment. Another metric to assess positive cash flow is cash conversion cycle. This metric measures the number of days it takes for a business to convert its raw materials into finished goods, sell those goods, and collect the cash from customers. A shorter cash conversion cycle indicates more efficient management of cash flows.
Product or service impact. The impact that products or services have on customers is crucial for African entrepreneurs to measure the success of their entrepreneurial efforts. This involves understanding the customer value proposition and measuring customer satisfaction and loyalty. One metric to measure the impact of products or services is customer satisfaction. This can be measured through surveys, interviews, or feedback mechanisms. By understanding the level of customer satisfaction with the products or services offered by a business, entrepreneurs can gauge their effectiveness and make any necessary changes to enhance customer satisfaction. Another metric to measure product or service impact is customer loyalty. Customer loyalty refers to the repeat purchase behavior and loyalty of customers to a brand. It is a measure of the customer's willingness to continue purchasing from a particular business. Measuring customer loyalty can help entrepreneurs understand the strength of their brand and customer base and identify areas for improvement. Legal and regulatory compliance. Ensuring compliance with applicable laws and regulations is crucial for African entrepreneurs to ensure the longevity of their businesses. This includes understanding and complying with various laws and regulations related to business operations, employee rights, safety, and environmental protection. One aspect of legal compliance is understanding and fulfilling tax obligations. Entrepreneurs should ensure timely and accurate filing of taxes, payment of taxes, and compliance with any other tax-related requirements. This not only helps avoid penalties and fines but also helps in maintaining a positive reputation and avoiding legal issues. Another important aspect of legal compliance is understanding and complying with labor laws and regulations. This includes compliance with minimum wage, working hours, and health and safety standards. By adhering to labor laws, entrepreneurs can create a safe and fair working environment for their employees, thereby enhancing employee morale and productivity.
Conclusion. Gauging the success of African entrepreneurs requires a multifaceted approach. It involves measuring financial success through metrics such as profitability, economic sustainability, and positive cash flow. Additionally, understanding the impact their products and services have on customers and ensuring that they are compliant with applicable laws and regulations is essential. By incorporating these metrics into their decision-making processes, African entrepreneurs can make informed decisions and take proactive steps to ensure the success of their businesses. If you would like to know more, please get in touch on any of the social media handles below. All our content is developed from real-life experiences in a professional and entrepreneurial journey that spans across 8 countries and 4 decades. Quote of the week. Whenever you see a successful business, someone once made a courageous decision. Drucker.